Hi there, welcome to Kneppy Invest. I thought I'd do a good fill video right now because many of my announcement inspired videos tend to be when companies release bad announcements and the share price gets absolutely hammered. Not so with National Tyre Wheel, ticker code NTD. This company actually released a positive announcement on the 20th of September and the market liked it. Share price rallied about 21.8%. So in this video, I'm going to have a quick look at that particular announcement and other stuff in regards to this company, including the charts, and we'll also have a look at their financial year 23 results. So on to the announcement. But before we have a look at the announcement, I should just mention what this company does. National Tyre and Wheel, they distribute and sell tyres and wheels throughout Australia and New Zealand. Fairly easy company to understand. And the first thing you should know about this particular sector of the economy is these sort of companies exist on really low margins. I'll talk about more about that later in the video. Now, on to the announcement that caused a bit of excitement in the market. Here it is. National Tyre and Wheel agreed to distribute Dunlop Tyres in Australia and New Zealand. Probably the most important point about this particular announcement is the second highlighted point. Additional revenue of 118 million Australian dollars per annum, and it is anticipated that this announcement this deal will be accretive to earnings per share from the fourth quarter of financial year 24. Now, you might think $118 million per annum, that's a fair bit. But National Tyre and Wheel already has over $550 million of revenue. So this will increase the revenue. But the big questions I have is, what are the margins, in particular profit or operating margins in regards to this deal? And more than likely, they are going to be fairly low because that's how this company survives, on really tight margins. And that can be a problem at times for companies, particularly if times are bad. Now, when times are good, more than likely, National Tyre Wheel will perform okay, but you won't see high margins when it comes to this particular company. Now, before we have a look at other stuff, let's have a look at their financial year 23 results. And you can see the really tight margins when we have a look at these results. So, revenue in financial year 23, $582 million of revenue. Cost of goods sold, $418.5 million. So straight away, the gross profit is fairly low. But not only $418 million of cost of goods sold, they also spent $84.4 million on employee benefits and related costs, and quite a few other expenses here. So overall, profit before income tax expense, $3.9 million. So you can see the really tight margins. Even in financial year 22, even though the profit was a little bit more before income tax, 14.6 million, a revenue of 555. So even then, really tight margins. Profit after income tax, $2.9 million. So don't expect a lot of profit to come out of this Dunlop Tyre Wheels. I would probably expect maybe at most like a 2 to 3% operating margin when it comes to this deal, which means, to be fair with you, even though it's a fair bit of revenue, there's not a lot of profit going to be added to the bottom line. Unless times are really good. Maybe they can increase their margins over the next few years if, things really pick up in the economy. Things really pick up with people needing more tyres. EV vehicles are heavier, so maybe they need more tyres. I don't know. I haven't really thought about that too much. Equity for this company, $115 million. The main thing I want to see when looking at the balance sheet is debt. So in the current liabilities, borrowings, $5 million. Don't really care about lease liabilities, but lease liabilities are fairly high for this company, $15.9 million in current liabilities, lease liabilities, and about $51 million in non-current lease liabilities. The most important thing here is borrowings, $88.3 million in borrowing. So about $93 million in loans for this company. So when you look at the debt to equity, it is quite high, not quite over one, but it is probably higher than I would like to see for a company like National Tyre Wheel. So in fact, debt would be the main reason I wouldn't even think about buying this company, but there are other reasons at play as well. Now, if we have a look at the cash flow statement, operating cash flow quite good at 24.2 million. Last year was 11.8 million. But if you look a little bit deeper, you can see that the repayment of lease liabilities is 16.8 million. So the way I would calculate operating cash flow is I take that a reported operating cash flow of 24.2 million, and then I minus the repayment of lease liabilities, which is 16.8 million. So a better indication of the operating cash flow for this company is around about $7 million. And then payments for property, plant, and equipment, which is capital expenditure, $4.1 million. So not a lot of cash flow coming into this business in financial year 23. Cash on hand at the end of the year, 32.6 million. So that means net debt at around about $60 million, which means enterprise value of this company is quite a bit more than the market cap. Now, talking about the market cap of National Tyre and Wheel, $115 million. Shares on issue, 133.3 million. And probably the next most important thing is what's happening with revenue. So this is their history, revenue history, and also gross margins. Also includes something else, I think, long-term debt. So just wanted to see how revenue has gone over the last few years, and it's really picked up from 2020 to 2021 and has sort of stabilized. The other thing I noticed here is gross margins have been falling. So over the last 6-7 years, they've been falling, while debt has also been climbing. So you don't really want to see net debt. Actually, it's not net debt. This is long-term debt. You don't really want to see debt climbing, but it has been climbing over the past 3 or 4 years. And the last thing I want to look at is the chart. So this is the long-term chart, the weekly chart, going back to when the company listed on the ASX back in late 2017. So really negative times during 2019 into the start of 2020. Share price got as low as 18 cents back in March 2020, 23rd of March. And then a really nice bull run in the share price, really beautiful uptrend. Share price went from 18 cents all the way to about $1.60. And that high in the share price was back in the middle or the start of 2022. Share price then went through a downtrend. And if we turn our attention now to the daily chart, you'll be able to see that downtrend in the share price from the high. We'll just try to get there. It is high. The well-defined downtrend. Share price fell from $1.56 at the high all the way back down to below 52 cents. But a bit of a shift in sentiment around about July into August. Share price has moved, or was trying to move, into a short-term uptrend. And then the company released this particular announcement with Dunlop Tyres, and the share price increased, was it 21.8% on pretty big margins. So the market loved this, and the very fact that it's happened as the share price has or is trying to move in uptrend has just added to a shift in sentiment around this company. Last time the share price was this high was over a year ago. So the share price now is at a 1-year high. So even though the market cap is now above $100 million, $115 million, you do have to add that debt. So $60 million of net debt, which means the enterprise value of this company is $175 million. And the very fact this company does exist on fairly tight margins, really low margins, it will also mean that if those margins don't improve, and the margins around this Dunlop Tyres is not that high, more than likely it's not going to be that high. More than likely, you don't going to see significant increase in profits over the next few years unless they really can increase those margins. So keep a close eye on National Tyre and Wheel, mainly because of the market reaction around this announcement. A really good one-day candlestick. So the share price actually closed at the high of the day. So not a lot of selling came in during the day. The market was more excited about this announcement. And because there was not a lot of selling, the share price now at a 1-year high, which means more than likely there won't be a lot of selling from now on. But wouldn't be surprised to see the share price dip back a little bit. But if the share price can at least go sideways, that would be good news for National Tyre and Wheel's chart and share price over the next few weeks, maybe even the next few months. So things are looking much better for National Tyre and Wheel. I think there is a shift in sentiment and definitely a shift in the trend in the share price. So if you have any questions about National Tyre and Wheel around this announcement, maybe I have it completely wrong and you think this company has a very promising future, particularly around the EVs. Did hear this argument once that EVs are heavier and there is a possibility they're going to need more tyres, which is intriguing possibly to National Tyre and Wheel. But who knows, maybe EVs have the needs of different tyres. I have no idea. Anyway, so if you do know, I'd love to hear your opinion, your thoughts. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.